So it's been a bit of a risk-off day in the markets, extending the falls from yesterday with equity indices, cryptocurrencies, and even gold falling. But the key question is, can these markets bounce back as they approach key technical levels? So when markets fall sharply like this, you tend to see liquidations, and to free up margin, traders usually close their profitable trades. And that explains why gold is down today, extending its falls for the second consecutive day. Is down along with the S&P 500 futures and European markets like the German DAX index. Is this the turning point, or is this merely a correction, a mini correction before the upward trend resumes? While I don't have the answer to that, it's important to take things from one level to the next and move on to the next opportunity. So looking at the S&P 500 here, the index still clearly in an upward trend. If you zoom out, the correction in the last couple of days could turn out to be a blip. You can see that some of the short-term levels that should have held the support, for example, this level here, the head of this hammer candle, this failed following yesterday's bearish close, and that level has turned into resistance today. So this level is pivotal insofar as the short-term is concerned. So if you go back above it today, that would be a positive outcome for the markets. But for the time being, it's down and we are below it. So let's see if the market will close below this level today. The next downside target is the low from that hammer candle that was formed last Thursday, which looked bullish. So there will be lots of stops resting below that level. Below that, we have the next low coming in here at around 6,533. That could be the next downside target if the selling gathers pace. So there's lots of levels to watch on the way down, but let's not get too bearish just yet, because this could well turn out to be just a mini correction before things start to improve again. And as far as European markets are concerned, well, the DAX is one of my favorite charts, and this too is approaching a massive area of support around 23,480-ish. This level has already been tested a couple of times in the past, and so far it has held on each occasion, even if we did go below it on a few occasions. But generally speaking, the daily closes have been mostly above it, with the index trading inside a very clear range this year, which is, or I should say in the second part of this year, because earlier this year we had that big rally from the April lows. So this is the trading range that the DAX has been stuck inside. It hasn't been able to rally away from this area in the last few months, which is potentially a bearish sign, but I will still give the benefit of the doubt for the bulls. And so I'd like to see what the index does around this area. For as long as we don't close decisively below it, it's possible that we could potentially see a bounce as early as later on today or possibly next week. But if we do close below this area of support and break the 200-day moving average, I think that could be the start of a more significant correction, which could pave the way for a bearish week next week. So let's have a look at a few other levels. Well, this level at 23,930 is the low from yesterday, which is now the first level of resistance to watch on the way up, should we get there. Above that, well, really, if we go back above that level, then I think that would be a positive development insofar as short term is concerned, in which case we could then see a run towards the more significant resistance areas around 24,400 area, or even challenge the highs that were created a couple of months ago. So right now the index is dropping towards a key area of support. Whether or not we'll get all the way down to this area remains to be seen. It does look like at the moment that it might get there, but just be prepared. The market could turn around. So if I zoom in, you can see a more detailed picture of the German DAX index, and right around current levels is where the index needs to hold, really, with this level being a possible support area on an intraday basis, given that it should have been resistance when the market rallied away from here. Well, now this level is being tested, and can it now turn into support is the key question. Bitcoin's drop below the 100 level has triggered lots of stops, and that has caused the cryptocurrency to extend its falls, and that 100 level happens to mark the closing level of yesterday's price action, and if we were to go above that area, I think that would be a bullish development. Keep an eye on yesterday's low, which comes in at 97.95, which is an interesting level to watch, and so far short-term resistance is concerned. In terms of support levels, well, this level right here at around 95 is a possible support zone to watch, given that it was an area of consolidation before the cryptocurrency broke out earlier this year to a new record high. That level was never retested from above until today. Can it bounce from there? Well, if it doesn't, then the next downside target could well be this area here at around 85, which is also a similar level to that, although it's $10,000 lower, which is a significant distance away. So anything is possible at this stage. I'm merely highlighting a few levels to watch, and based on the reaction of price around these levels, we could come up with tradable opportunities. So it's important not to fixate in one particular direction. Let's see what Bitcoin does around these key levels. I mean, they don't have to come all the way down here before creating a possible reversal looking stick, but what price does around these levels is important nonetheless, and take it from one level to the next and move on to the next opportunity rather than being fixated in one particular direction. So that's Bitcoin for you. And looking at gold, so following that breakdown on the 21st of October, this was the last support zone before the market gave way. That level was tested yesterday, and that's where I expected the market to turn lower from, which is precisely what's happened here. Does that mean we will go significantly lower from here? Well, not really, but can it? Of course it could, but we'll take it from one level to the next and move on to the next opportunity. So the next potential support is right here. This was the base of the triangle pattern that we observed a couple of days ago, and it remains exposed for a potential retest from above. Can we see a bounce there? Maybe. If it doesn't bounce, then the next target for the sellers would be the liquidity resting below the most recent low, which comes in at around 3,928. That would be the next downside target. In terms of resistance levels to watch, yesterday's low comes in at 41.45, which is now the most important resistance level to watch. Above that is that area I shaded earlier at around 42.20 or thereabouts, with this low right here as well being an important zone for the bullion market. So this shaded region is very important. Above that, I think it would be very bullish, and we could well see new record highs. Don't forget to like and subscribe, and for more market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.